So we have gone deep on how to swing trade effectively using CRT, candle range theory. What I want to do now is set you up for your first swing trade and get you used to what you're looking for in the market. Quick disclaimer though, there is a lot more to come. We haven't touched on order flow, multi-time frame analysis in terms of marking up higher time frames. We haven't really looked at price execution. So what we want to do right here is just get you used to seeing the confluence between time frames, and that can get you a long way of the way towards taking profitable CRT swing trades. So let's get into it. So first and foremost, what are we looking for? Higher time frame alignment. We're going to take our trades based on monthly direction. So what is the monthly telling us? What phase of price is the monthly in? Is it accumulating? Is it manipulating? Or is it distributing? That's going to give us a lot of directional context. Then the 2 weekly and weekly, what we are looking for is that AMD, same thing, accumulation, manipulation, distribution, but in context of the monthly time frame. The weekly we're going to use more as a confirmation for our trades. We want to see that the weekly is not in conflict with the 2 weekly. And of course, if you're executing like me on the 12-hour time frame, then you want to make sure that price action is in your favor. We're not taking trades when we actually have bearish price action in front of us. For example, if we're taking a long trade. Then finally, is there some sort of higher time frame price action that's against us? So are we in the phase of accumulation or distribution on the 3-month time frame, and that is actually in conflict with our whole trade idea? That is not what we want to see. So these are the sort of things that we're looking for. In terms of a checklist, this is what you need to do. Check your higher time frame alignment, monthly, 2 weekly, weekly. Does the trade make sense? Second, is there higher time frame conflict? Just scan the 3-month, the 6-month. Is there a chance that price could do something else? If not, you're probably good. Is 12-hour price action in your favor? We're going to cover that in a lot more detail in series 2, but you can see it based on what I'm going to teach you in a sec. Then lastly, do you have a clear target that is dictated by your higher time frame analysis? And then, do you have good risk management? Are you entering the trade at the right place? And are you setting your stop loss in the right place so that if your trade invalidates, you're out of the market? Because losses are fine as long as they are good losses based on the right logic. So let's take a look at your first CRT swing trade. This is actually a trade that I entered on silver. So this does not need to be Forex. This can be crypto, metals, indices, stocks. And actually I've got a lot more content coming for those different asset classes. But let's get started. So first thing I was looking at here on silver is we know price is extremely bullish. But how did the monthly candle close? Very simply, that was the high of the previous monthly candle. We ran up and yes, we sold off hard, but actually price closed bullish. So firstly, I'm looking for higher prices because I know that we are not in a phase of manipulation distribution. We are looking for at least to manipulate this candle, in my opinion. So straight away, my target becomes here. This is my higher time frame draw. Second, we can look at the 2 week, and straight away we get the picture. So price has the opportunity to raid below this 2 week accumulation candle, and that has completed a 2 week CRT. Accumulation, manipulation, closed inside the range right here, then distributed to the first target, then retraced and closed inside this 2 week range. So we have new context. We are in the manipulation phase of 2 week price. Okay. What about the weekly? Let's bring that up. We have bearish candle, price trades lower, closes inside this range. So if we're looking for our first target, it's right there. That is the target that gets exposed when we raid and close inside this accumulation candle. Just to check back on the 2-week time frame, at this point, we don't have an exposed target. We have a potential target which aligns with our monthly, but we haven't got a close. We don't have a close until this candle closes right here. So this is target 1. We can even write that if it helps. Actually, I'll just go T1. And then we have this secondary target, T2, because if we take this away and look at the monthly, we closed bullish. So we are expecting higher prices. Okay, so we have full alignment. Now, I don't really need to check the higher time frames here, because I know silver at this point is at an all-time high. So I know price action is bullish, but let's just do that anyway. Okay, we had a bullish candle, so we can definitely expect higher prices. We don't have any conflict. So that can be as fast as your 3-month check. Let's bring back the 1 month. Okay, so we can now bring back our 2-week time frame right here, and we can then start to look at price action. So we got price action trading lower. We're having bearish price legs, stings into internal range liquidity in these legs, and lows are being traded through. So we get a slight shift here, the last buy pressure into the market, and we sell off. So let's actually zoom into this so we can really see it clearly. So the last order block is the last buy before the sell. So we can mark that right there, and I'm just going to mark that as a 12-hour order block. You see I've got a little 12 there to signify that this level here is my order block. Price then drops and creates an inefficiency in price. So between this candle and this candle, there is a gap right here. It's a fair value gap. So this is often what price will fill before continuing lower. But what do we see? We don't see that happening at all. If we just map price right here, we'd expect to see a tag of this or the order block itself and then lower prices. But instead we just trade straight up and close inside this order block. In doing so, we are sweeping a candle range low, and we're developing a new demand-based 12-hour order block. So this is the last sell before the buy pressure in the market. So you can take an entry from that order block right there to target 1. That is valid at this point. That's a 3.24R. You can also wait for price to retrace into the order block and shift bullish, in which case you see price trades lower, shifts again. What do we get? The last sell before the buy pressure in the market. So we can mark that right there. And this was the entry that I saw in the market. I was lucky to see this in the second half of this candle. So it was just as price was starting to look to distribute. And then we have target 1 and target 2. So this is a 5R plus trade with everything aligned, full contextual alignment. We have no higher time frame conflict. We have a close above on the monthly. We have 2 weekly manipulation complete, distribution phase starting. We have on the weekly accumulation candle, manipulation. This in itself is purely manipulation of this low. So there is a chance you could get stopped out, but then you get a second entry opportunity that will make your money back. And then you just get pure distribution. And actually, the frustrating thing is, you see how close price gets to the target before dropping away. That in itself is manipulation. It's trying to entice more sells into the market, but nothing actually changes. So as soon as you start to see this corrective price action where price is starting to realign, you can get involved again. But that is how to start thinking about your first CRT swing trade. What my advice is start getting into the market. You can see all of the different trading. This is intentional. So this is my trading list. Look how many pairs I'm scanning. And every day I'm going through this, and it now takes me 10 to 15 minutes. And I'm just looking for, do we have valid setups and what's price action saying? And you can start practicing this. You can take pairs and go back in time. Just look at how candle ranges relate to each other. What happens? Where are the opportunities to get involved? When does price action align with these higher time frame candle ranges? Most often when that happens, you get very strong trades. So that has been the completion of our CRT Swing Trading Foundations series. We have covered a lot of material, including time frame alignment, how to actually get into trades, what mistakes to avoid, what to look out for before you get into these swing trades. There's so much more to come. The next series is order flow, then we're going to look at execution, and it doesn't even stop there. So I'll see you on the next video.